In a recent interview on CNBC, the Robinhood CEO disclosed the top 10 stocks that Robinhood users, like yourself perhaps, were buying up during the stock market crash. So in today's video, I'm going to go through this list with you, go through these top 10 stocks, and I'm going to give you my thoughts on each one of these stocks and whether I think that these stocks are actually worth buying, especially at these prices. So if you're a Robinhood user, let me know in the comment section down below if you were actually guilty of buying these 10 stocks as well. I'd be curious to hear your reasoning as to why you bought these stocks. But either way, this is kind of an impromptu video, so drop a like down below if you want more of these kind of videos where I just look for information and articles and interviews that I think you guys may find interesting, and I create a video on it. So if you want more content like that, all you have to do is hit the like down below. So what did concern me though about this top 10 list is out of 10 companies, only 2 of them are what I would consider safe blue chip stocks. What I did see though was that the majority of the other stocks were heavily beat down companies that are fundamentally struggling right now, and investors probably saw the prices down 50-60% or something like that, and they're like, I can easily make a quick gain on this. So if you do end up holding any of these stocks when I go through them, especially the more speculative ones, I would highly recommend that you evaluate your position and really figure out if you want to be in these stocks, because it seems like the herd mentality right now is to flood money into these companies. Usually when I see the majority of beginner retail investors flood into a certain company, it's time for me to either scale back on that position or completely avoid that position, at least for the time being, because it shows me that there's a lot of FOMO out there, there's a lot of chasing out there, and more likely than not, that stock is going to see a pretty big correction sometime soon. I also noticed that some of these stocks here are trading at a pretty low dollar value for their price share, so that may also be another reason that investors are attracted to them. Say they're trading at $10, something like that, versus companies like Apple, which are trading at over $200 per share. They may see that dollar amount and just think, no, I want to go with the cheaper ones because there's more upside. Guys, don't fall for this trap. The dollar per share does not indicate the value of a company. Look at their market cap instead, and that'll tell you the actual value of the company that you're buying. Alright, so let's get into this list now. I'm going to go through 10 stocks. I want you guys to pay attention closely because I want to hear your thoughts on these at the end of this list. So American Airlines, no surprise here that we're seeing an airlines company in this list, and it's probably one of the worst positioned ones to get through this global issue. The stock is currently down 64%, trading near $10 per share. Now, although the airline industry does have some upside in my opinion, I believe the safest way to really play this sector, if you absolutely want exposure to it, is through the JETS ETF. Now, I did make a video recently covering this ETF in detail, so make sure to check that out at the end of this video. I'll leave a link in the description down below as well, so you can kind of understand how this ETF gives you exposure to this sector while still gives you a bit of safety as well. Good old Boeing made the list here, and I'm not surprised as this stock dropped from over $300 per share to under $100 per share at one point. Currently, the stock sits down over 60% as their business and customers, like American Airlines, continue to struggle. Boeing is considered too big to fail, and although they do have a lot of issues right now, this is an investment that I personally am a huge fan of for the long term. Now, one thing you have to keep in mind if you're buying into Boeing today is that in the short term, this company will have a lot of issues, a lot of debt payments, but I do think that even looking out, say, 1 year from now with Boeing, it should be in a better position than it is today, which indicates to me that the future for this company does look stronger than it does today. Of course, we can't have a list here without Carnival Cruise Lines. There has been a huge amount of interest around this stock on YouTube, and the cruise line industry as a whole just continues to get rocked. Carnival is down over 77% in a couple of months, and once again has attracted many beginner investors to it. Hey, even I made a video recently that I bought some Carnival stock around $8 per share, as I do see some upside here, especially at those prices. But again, as with the airlines, this is an extremely risky investment, and it's an industry that will continue to hurt here in the short term. It's not going to be a quick recovery, and if you're expecting this stock to jump back to where it was before, $40, $50 per share in the next year, I would say that's very unlikely to happen, and it's going to take a lot of time for this to recover. However, that being said, I wouldn't be surprised to see the stock trading near the $20 to $30 range in the next couple of years, which is where my target would be for this company. General Electric used to be a very strong blue chip company back in the day, but in recent years it has fallen out of favor, and for good reason. Year to date, the stock is down over 50%, and this has just added to the downward spiral this company has experienced the last few years. Many investors got into the stock as a value play for a turnaround business and for their dividends, but it ended up being a value trap, and the company actually cut their dividend. Now, I do believe that GE will survive through this, but I can say this will be one of the largest companies in the world once again once they get past this. And as a result, this isn't a stock I'd personally be interested in here, especially when there's better industrials like 3M or Honeywell, which in my opinion provide better value. I'm not surprised to see a stock from the green sector here, and AURORA specifically has recently turned into a penny stock, down over 67% year to date and down much more on a longer term chart as well. This company has some fundamental issues to sort out. However, my fear is that Robinhood investors are getting into this name for the hope that they will recover. They're probably seeing the stock at under $1 and they're thinking this is a no-brainer investment. I can easily double or triple or 10x my money here in short order. And that's kind of where I see a bit of concern. The sector as a whole has been rocked, and AURORA was one of the hardest hit. So again, this is not one of those stocks that I would personally be picking up, especially when you look at their balance sheet, and especially when there's genuine concern that this company could face bankruptcy. Ford is an interesting one because it's a stock many investors get into for the dividends. Unfortunately, not only is the stock down nearly 50% year to date, but they also cut their dividend recently, so investors got the short end of the stick here. I really can't stand behind this industry because traditional gas cars are not the future in my opinion, and no matter how attractive these stocks may look, the future is bleak in my opinion, and right now they are getting exposed for the poor financial position that these companies are in. Ford, GM, other traditional manufacturers are a no-buy for me even at these prices. That being said, Tesla made the list here, and this is a stock I absolutely love. So far on this list, Tesla is the only green stock up 60% year to date, and rightfully so. This is an incredible company for the future, and this is still doing well during these times. Tesla is one of my favorite stocks of all time and is also one of my best performing stocks of all time. And if you do recall, I did buy into the stock at around $200 per share. Now, if you want to learn more about my thoughts on Tesla, I actually just released a video a couple of days ago on this. So check that out once you're done watching this video. Again, link will be in the description down below. So this stock is actually a new one. I've never really heard of them before. INOVIO is a pharmaceutical company, and it's up a whopping 188%. Now, I have a strong suspicion this is why Robinhood investors are buying up this stock. It looks to me like a perfect example of a pump and dump penny stock, and I can guarantee majority of the investors who bought into the stock in the last month have one, absolutely no idea what the balance sheet looks like, and two, have no idea what the company even does. But based on their recent price movements and the fact that it's a fairly small market cap company around $1 billion, I personally would be very cautious about the stock. I wouldn't be touching this personally because I tend to buy stocks like the last two ones we're going to cover here, which are solid blue chip names. So the first of the two blue chips here to almost round off our list is Microsoft, and this is a company up only 4% this year, but unlike the last company, this is a $1 trillion company. You get stability, you get growth, and you get a good brand name here with Microsoft, and I think that they are in a position to do well during this global issue. The company offers services that are in the cloud, that are software-based, video conferencing-based, and this will all help customers during these tough times. Microsoft is a solid stock to have in your portfolio, and even at current prices, I like the value that this company poses for the long term. Rounding off our list here is good old Disney, which is our second blue chip stock. And I believe this is another company that's going to have a phenomenal long-term future. This blue chip giant is down over 32% year to date, and while their business will hurt in the short term with the theme parks being closed, theaters being closed, cruise ships being closed, Disney Plus is still there and Disney Plus is still growing, so this company is in a position to do extremely well with that segment, and then once the other segments open up, that should pick up steam once again, giving Disney a position of strength over the long term. Current price is around $100 per share, in my opinion, is an absolute steal for this company, and I think you get a lot here with this brand at these prices. So that kind of rounds off the top 10 list here of stocks that Robinhood investors are looking at and have been buying in the last month or so. And what concerns me, guys, is that most of these businesses are low quality stocks that have been beaten down quite severely. And it really pains me to see this because there were so many premium, high quality companies that also got beaten down severely during this market crash. Companies like McDonald's and Starbucks, like we've talked about, are perfect examples of blue chip companies that got beaten down severely and provided extreme value during the crash. So it really makes no sense to me why an investor would put their money into these highly speculative companies where they actually have a possibility of losing their whole investment, when you could focus on premium companies. Disney, Microsoft are good examples in this list, which you know are going to be around for the long term, you know are going to recover from this, and you know you're going to make money on that investment over the long term. So it really makes no sense to me to speculate, to gamble, and to pick most of the other stocks on this list. Anyways, that kind of rounds off my video here. I'd love to hear in the comment section down below if you hold any of these 10 stocks. Let me know your thoughts on those stocks if you do hold them. But either way, guys, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.